Coming from the Bitcoin, as Bitcoin profitability touches 2-year lows following market struggles. The crypto market has been struggling for a while now and has taken the likes of Bitcoin down with it. The result of this extended trend of lower prices has been that profitability has dropped across both major and minor digital assets in the space. For Bitcoin, the pioneer cryptocurrency has been especially hard hit as its profitability has now declined to 2-year lows. Even with the recent price recovery, the profitability of Bitcoin has been at the worst level since 2020. What has happened has been both a mixture of declining prices over a number of months and newer investors who got in at higher prices being left with bags of losses. As a result, the profitability has now touched levels that it has not seen since May of 2020. There are currently only about 54% of all Bitcoin investors who remain in profit. Now, this still means the majority of holders are still in profit, but compared to where this percentage was in the last few months, it is obvious that the decline has been large. In total, there are only 24.77 million Bitcoin addresses that are counting a profit. Another 20.04 million addresses are currently in the red, amounting to 44% of all Bitcoin holders now in the lost territory. This puts only 2.49% of Bitcoin holders in the neutral zone, so only 1.14 million addresses are holding Bitcoin that were bought at prices equivalent to the present market value. Once again, that's why on this channel we talk about investing in silicon, not buying the currency and hodling. And that is because if you are generating revenue, you are always in the green. And if you stop generating revenue, you can turn off the machines and cut the loss before things get too bad. Depending on your electricity cost, there are people that are starting to have to shut down machines. The revenue is dropping, of course, on both Bitcoin and the GPU mining market as far as Ethereum and the rest of the ASIC market too, if we're in Cadena or whatever that may be. But for the large majority of miners, we are at the point to where we are just experiencing lower revenue, which in turn, of course, is translating into lower profitability. But I'm still in the green, and I know a lot of other people are still in the green. This is why I was talking about, just getting your power costs as low as possible. And then it's an expansion game. You either expand or you die. And that's kind of where this is at. You reduce cost and you increase productivity. And that's the only way to survive the bear market. If you're just buying cryptocurrency and hodling, this is the position you end up being in with 20 million people, right? And it's hard for people to stay in when you are experiencing an economic downturn on top of it all. Whale activity grows though. Even with the profitability at 2-year lows, it has not stopped whale activity on the network. The number of large transaction activity had grown significantly in the last 2 days, rising more than 40% from Sunday to be sitting at 19.62K large transactions that have been carried out in the last 24 hours. What this suggests is that whale activity is ramping up in the market once more. After the lull of the weekend, their recent activity has followed the price recovery and Bitcoin settles above 31,000 US dollars. This activity is expected to continue to grow. We talked about this yesterday. Is it expected to grow? It doesn't appear to be expected to grow in price right now. It looks like most people are projecting that it goes back down, and then we just had that holiday weekend pump. I'd be curious what you guys think in the comment section as well as in the live chat. I am feeling a lot like 2018, which is this kind of odd denial of the facts that the Bitcoin super cycle affects the market, right? And I saw this in 2018 where it just sat really flat for months at a time. And it just kept slowly pinging down further and further until it finally hit its bottom. But it took a long time for that to take effect. And so if I'm sitting here and I say we are going to experience what happened in the previous super cycles again, then I would expect kind of the same sort of thing. We'll have these little minor kind of bump backs up and then we'll go back further down. Once again, though, we do talk about the institutional investors, these whales, this whale activity that we're currently discussing right now. And we say, well, maybe it's different now. Maybe we have a higher bottom. Maybe the bottom is at $30,000, right? But I think the length of this kind of lull should still sit around that traditional super cycle, so we won't see any recovery until 6 months after the next halving or so, somewhere around there, which is in, like I said, end of 2024. In terms of profitability, the market continues to favor long-term holders. Data shows that holder composition is made up of 61% of those who have held more than a year. Now, given the growth of the market in 2021, it is safe to assume that those who bought coins toward the end of the year are currently at a loss. However, those who have held before the bull rallies began remain firmly in profit and will continue to do so even if Bitcoin were to decline another 50% from here. And so what's your lesson? Is the lesson to hodl, though? Right? Because we always get this idea, stack sats, hodl Bitcoin. And I even wear the, F Banks hodl Bitcoin shirt. And look, holding Bitcoin is fantastic if you can afford to do so. The problem is this really appeals to people that don't have some sort of large costs and effect of the economy on their day-to-day lives. What do I mean by that? I mean, your gas prices going up, your food prices going up. You have the problem of unprepared for medical bills or whatever it may be that puts you in a position where your investments have to be liquidated in hard times to cover costs. And that's really only going to affect lower to middle class income, and it doesn't affect the upper class. So if you're upper class, then fine. You can afford to take that $10,000 to $30,000 investment, dump it into Bitcoin and sit on it for 5 years, right? Because you're fine. You have good health insurance, you have a good job that basically pays you enough to still maintain your current lifestyle. You're not having to worry or struggle. To expect people that are of the middle to lower class to be able to hold on to something for years on end and avoid all bad things that could possibly happen to them that come up, like flat tires, a blown transmission, a crazy medical bill, whatever it may be, is unrealistic. And that's why when you get into, for example, a book I always recommend is Rich Dad, Poor Dad, and that sort of thing, and talk about trying to build that long-term wealth, you start to realize that generating revenue is preferred there. Now, am I saying mining is the number one way to do it? No, because mining can be extremely complicated and intensive from the work perspective side of things. And when you're in a bear market like this, the work has to be done by you, and you can't afford to hire people for the most part until you've scaled up large enough to really take care of it. But what it does do is put you in the correct mindset. Is the lowest barrier to entry for generating revenue, at least GPU and CPU mining were for the longest time. I do fear that is getting pushed out to a certain extent because of just the market and what's happened with Bitcoin mining specifically. And then, of course, the merge for proof of stake on Ethereum. But I wouldn't sit here and try to tell people to purchase Bitcoin and just hodl, right? Maybe if you're I don't know. Maybe if you're young and single and you can sleep at your parents' house for the next 3 years, you can just buy and hodl, and that's fine. That's not everybody's position, though. So it's a tricky place to be in the market. And like I said, I've seen it before. The people that were able to, either hodl the Bitcoin because they were in a special position to where they were capable of doing so, or the people that were able to expand their farms with the downturn were the ones that got paid off the best in this previous cycle. So that can ring out to be true once again. Trust the process and keep moving forward. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.